Markets are trading modestly higher. Stocks are a little bit higher after consumer confidence did come in lower than expected. Saw the weakest level there since January 2021, all as investors remain hopeful that the U.S. will narrow the scope of tariffs. Let's bring in Council of Economic Advisors Chair Stephen Miran. Stephen, it's great to have you. Thank you for joining us today.
Thank you so much for having me. It's great to see you.
So we see another weak consumer confidence number, just further evidence of this deterioration in the soft survey confidence data. I know you're a tariff guy, but do you think that they're having an impact?
Well, look, today's consumer confidence data are what they are. I would point out that folks often let their political views influence their views of the economy, which tends to manifest in the confidence data. And there's been a breakdown in the correlation between consumer confidence data and any real economic outcome in recent years. The correlation hasn't been super strong. And I think that's part of why you see the market not really responding very much to today's consumer confidence data. Instead, there's been a whole host of other data which have been actually quite positive for the economy, whether you're thinking of the retail sales data, job creation, total lack of meaningful numbers of layoffs. The S&P PMI, services PMI yesterday came out fantastically. New home sales was good. Housing starts is good. There's a whole bunch of data for the economy that are pretty decent and pretty darn good. And so I think that's part of why you see the market shrugging off today's confidence print.
Yeah, I mean, retail sales were okay, but you're right. The jobs number hasn't really seen any weakness. I think the concern is as confidence gets hit, at a time where consumers are increasingly stretched and tariffs go through, which could result in, even if they're one-time price increases, it's going to make a deterioration in the economy. The soft landing that the Fed worked so hard to preserve is really in jeopardy now. You don't buy that?
No, look, I just don't think that there's been a very strong correlation between the confidence data and actual consumer spending in recent years. And if you go out in the street, people are going about their lives. They're getting their paychecks, they're spending their paychecks. The economy is marching on ahead. And as far as tariffs go, I think my view is that the country on which we're imposing the tariffs ultimately pays for those tariffs, as opposed to having any material negative economic consequences in the United States. And I'm happy to get into that subject if it's something you'd like to talk about.
Sure. I mean, just because we hear and we monitor conference calls of companies like a Walmart who says that, they import a lot of stuff from overseas, they're going to pass it on to the consumer.
Yeah, so look, in economics, there's a theory called tax incidence, right? Which basically argues that whenever you look at any economic policy, the party that's more inflexible ultimately bears the costs or the benefits of whatever policy is being implemented. And when you think about American consumers, we have plenty of options for where we can get imported consumer goods from. We can make them at home. We can substitute into home production. We get them from a variety of countries, in which, depending on what tariff rate we apply to them. And so firms like Walmart, have many options for where they can source their consumer products. And you see that when they go to their suppliers in China and they say, look, you're going to have to eat the tariffs. And part of the reason why they have the ability to do that is because the factories in China are designed explicitly for the U.S. consumer market. Those are installed factories. They've already been put in place. They've already trained their staff. All those factories are aimed directly at our market. There is no good substitute for them. That gives us all the leverage and is why that other countries will ultimately eat the cost of the tariffs.
I don't disagree. And at the top of the show, I showed a chart showing that there are lots of ways to mitigate tariffs. They can redirect trade. They can diversify supply chains. Like, to your point, the other countries will feel it worse. But the stock market is telling you that it definitely is going to be disruptive for corporate earnings, for margins, potentially for demand. Not all of it can be rerouted. So ultimately, how do you think about, given April 2nd is coming and we don't know exactly how widespread that's going to be, the impact economically?
Yeah, so April 2nd is not that far away, and Liberation Day with tariffs is around the corner, and everyone will find out what those are soon enough. But look, you mentioned the stock market. I think that there's a lot of things that are driving the stock market, and I think that there's a lot of focus on tariffs, but really there's a whole host of other policies that are being enacted as well. And something my colleagues have talked about a fair amount, and I want to emphasize also, is that we are transitioning the economy away from being a primarily government-driven economy and towards one that's driven primarily by the private sector. And so what I mean by this is if you look at the share of jobs that were created in 2023 and 2024, so the second half of the Biden administration, after COVID is done in the rearview mirror, 73% of all jobs that were created in those years were created by government or government-adjacent sectors. And by government-adjacent, I mean sectors like education, like healthcare, like social assistance. These are sectors of the economy that derive a very, very substantial, if not most, of their financing from taxpayers in one form or another. So almost 3/4 of job creation was due to these sectors, and that's a problem, right? And reorienting the economy from government-driven sectors to the private sector, which is more efficient at creating long-run prosperity, and the only path to long-run prosperity, look, that may have some bumps. And I think that the stock market is seeing that in part. There's lots of other uncertainty into the economy. We're waiting on Congress doing its job to extend the president's tax cuts from 2017 and ideally cut taxes even further, which will also do their part in ushering in the president's new golden age.
Chair Miran, speaking of tariffs and taxes, one comment in the White House briefing room a couple of weeks ago that got some notice was when Carolyn Levitt said tariffs are a tax cut for the American people. Is that the official White House view?
Look, only the president gives the official White House view, but what I would say is that, tariffs raise revenue, and that revenue is ultimately financed by the country that we're tariffing. And if you use that revenue to preserve low tax rates on Americans that we achieved in the 2017 Tax Cuts and Jobs Act in the president's first term, if you use that revenue to cut tax rates even further, then in that sense they can be a tax cut for Americans, because you use the revenue raised by tariffs on foreigners in order to pay for lower taxes on Americans. And I think that's a fantastic policy. It improves American competitiveness. It improves American industry. It improves the American economy. Households and firms and small businesses and workers and families get to keep more of the money they earn every day.